Hi, student. Good day. Today we are starting with the chapter 11, Strategic Business Leader, the Board of Director. This is the main chapter for your study and your practice, exam practice, and now you uh, pack up yourself for your exam and be ready and prepare for your March exam. Wish you all the best and prepare yourself in advance and everything is easy and follow ACCA guidelines, ACCA past paper, ACCA their exam uh, format, whatever is available on site, go through because I have tried to publish some of my videos on this topic, but later I saw those are copyright issue and ACCA mentioned that we can't publish only for study purpose it can be, but here on YouTube I don't think is for study purpose because we have to do offline. But if you are interested, I you can send me a message. I will give you a link for those readings. Okay, let's start with the board of directors. The chapter objectives are the assess the duties, role of director, and function of the board, including setting a responsible tone on the top and being accountable for performance and impact of the organization. This is the main issue. Is this in this management or the board of directors is to held responsible for the person who is playing the role. So they are not just only for enjoying the benefits or the remuneration or the benefits or other facilities, but they have to be answerable and to provide a reliable and transparency in the business operations. Evaluate the case for and against unitary and two-tier board structures. Describe the assess the purpose of responsibility of non-executive director. This is one of the favorite topic. Is they keep testing. I have seen last 2-3 sittings. They tested in this area very frequently because whatever topic they feel it's a weak in the student, they keep testing again and again. So we have a grip on this area, dear. Describe the assess the importance of induction performance appraisal. This is also in performance appraisal is also important. Explain the meaning diversity and technically evaluate the issue of diversity. Assess the importance of roles, purpose, and accountabilities of the main committees with the objective of governance. Describe and assess the general principle of remunerating directors and how to modify directors' behavior to align with the stakeholder interest. This is what I was talking in the beginning. So they just are not here for a remuneration or the huge remuneration or their incentives. They have to do work also for the sake of stakeholder and for the shareholders. But this is the structure of board of directors. How it work like under board there is a committee and then the other side they have a nominee directors, nominee committee, and then board of directors are there. Under nominee they have a composition and the roles, but the main board having all these facilities, they have meetings, they have a two-tier structure, unitary structure, so they decide which structure they will go for. And then roles and responsibility composition is there, induction, CPD, performance evaluation like HR team, and then legal and regulatory framework is there for the implementation of all their key areas. Then chairman, under chairman there is a CEO and non-executive directors, executive director, purpose and roles and independence. So these are the structure which are set by the board of directors for all their company's function. So board of director roles and responsibility, how this it work under roles and responsibility. The board of director in relation to corporate bodies. So the director is an officer of the company, director of the company collectively are referred to as a board director. The shareholder appoint chairperson, and then directors individually and collectively as a board of director have a duty of corporate governance. So these are the important points which you have to memorize. So board of director again, the roles and responsibility, board composition, appointed a CEO, board will appoint the CEO for the running operation, and under CEO, the company secretary, acquired and allocate the corporate resources, internal control, govern the company, account to the public. This is what, so they have designed this format. Again, as the previous chapter, we have gone through UK Corporate Governance Code 2016. The key roles of responsibility of directors are. So under this code of corporate governance, so provide entrepreneur leadership, represent company view of account, remember, memorize the key points. So when you write down these points in the answer sheet, so you get your mark straight away. Determine the company's mission, purpose, strategic aims. At the student, those student who having an old version of the books like 2023 or 22, so they can see, they can match the pages if something is missing. So just message me, I will give them added pages, whatever is the new pages or missing pages. So I will share with them. Don't worry, just message me all these details. Instead of a whole book, I prefer I give you exchange you just only a specific pages where you feel there is a little changes there. Ensure the company's management is performing its job very correctly. Establish appropriate internal control and enable to risk assess the risk, and then ensure necessary financial human resource in place and the company's functions are doing well. Ensure that obligation of shareholder and their stakeholder are understood and met. They most regularly to discharge its duty effectively. So for a listed company, this is the difference. Appointed appropriate NED, non-executive director, establish remuneration committee, establish nomination committee, establish audit committee. So they appoint all these committees to run the show and to verify their functions properly. Then there is another note for effective board. What is an effective board? They have explained it further for your clarity. The same, just go through, it's your reading part. So whatever is the additional paragraphs or the pages which they added on in the Kaplan study book, I will not read or explain because I already cleared the concept in the beginning of each topic. So you can stop, pause this video and read these area specifically. Potential problem of the board. So what are the potential problem of the board for the performance point of view, and how they make a difficulties due to these barriers, how to overcome these barriers. What is diversity? So diversity mean to say that from one to another area to another area, that describe the range of visible and non-visible difference that exists between people. The diversity harness these differences to create a productive environment, and everybody feels valued where the talents are fully utilized. And then these can, along with the dimension of following race, ethnicity, gender, sexual orientation, socio economic status, age, and all these things should be taken care by the management. Physical ability, religious belief. Diversity in the board is set broadly to have the following benefit: more effective decision making, better utilization and talent pool. And the diversity, the board is a step toward better governance. So diversity is a diversifying the board. So that is a diversifying. So always is a mixed culture is one of the example. So they all have worked together. Women on the board. So this is also part of diversity. Just to go through diversity of non-executive director. The Higgs review found that a majority of NED in UK companies are white, middle-aged males, so and so. Just to go through these areas. Their cultural things are there. Action for increasing board diversity. How they have taken action. Board agenda items likely to include the following: Companies Act requirement, approval of interim and final financial statement, approval of interim dividend, recommendation for final dividend, approval of significant changes, appointment of a removal of key staff, remuneration audit, recommendation of appointment and removal of auditors. So they are busy doing all these activities. Stock exchange management, approval of the board. Okay, student, the women on board, this is also part of this their structure of their directorship. In the UK, 2010, women made 12.5% members of the corporate board, according to their survey. And the diversity of non-executive directors, uh, it shows about their workings. So just to go through about their action of increasing board diversity, how this board diversity is increased by their action. So see, these are the numbers of the women, how they diversify their staff, their changes are there. So they just go to these remain all 15 all male board, and these are the theories and just reading part. Whatever part is not relating to your mainly from the exam point of view. Board agenda items, Companies Act requirement, approval of interim and final statement, approval of interim and dividend and recommendation, approval of significant changes in accounting policies. This is a board agenda. All these function are done by this board. You have to memorize, because in the scenario they can ask you, they send you mention the some problems, so they will like to know so whether you have an understanding on this area about the management of the board. Then again, they gave a board structure, the two-tier board and one-tier. This is mean authority with the two-person. So they have a two-tier. One is sitting in one country, another is sitting in the other country. So they have both have authorities. Unitary is a single own and the single board comprising executive director NAD, and the two-tier board is having a two boards like a supervisory board and management board. So this is a once you understand the basic things and the meaning of their terms, so then the concept will be easier for you. So I would suggest a student, if sometime if you don't know the meaning of the word, first of all, you go to the dictionary, refer to dictionary, get the meaning, and then move on. So your 70% problem will be solved. So you will apply the same concept. So now here two-tier board. So how this two-tier board is the code of termination, the right of the informed involved in the decision that affect this is Act of Germany 1976. This is all their internal issue, but the main concept you mentioned, understand the two-tier board, how it works. Upper tier board is a supervisory board. So how they appoint strategic includes employees, chairperson, member are elected. Advantage of two-tier board. What these are the advantage: clear separation, implicit shareholder, wider stakeholder, independence of thought, direct power over management. So they have all these benefits. The problem with the two-tier, so dilution. So both have authorities. So they will see perceived differently. Isolation or supervisory board. So agency problem between board where one will be acting on behalf of others. Increased bureaucracy. So they have a lot of protocols. One person is available, the other is not available, busy in other activities. So matter will hang up, will not get resolved. Advantage of unitary board is a one-man show or single unitary. NED expertise, NED empowerment. So compromise, responsibility, reduction of fraud, improved investor confidence because they have a quick decision, quick all implementation according to the need, according to the requirement. So non-executive directors, what are their strategy role for the non-executive director NEDs? So they contribute to development of strategy. The risk role, the roles of NED, this is the role of NED. They just perform all these functions. You remember memorize this area, so it will help you out for the when you have some interaction in the examination. The key role of NED, so the NED scrutinize the role of NED, risk role, and the people role for NED, oversee the range of responsibility. So all these NED concept you have to very much familiar. To be effective, NED needs to build recognition, well informed, have a strong command of issue relevant to the business, insist on comprehensive. Ensure that information is provided sufficiently in advance, meeting the enable, insist that information is sufficient. These all these points are again they have repeated for your further clarification. Independence again, independence of a non-executive director, the same rule of independence will be applicable with what we discussed in chapter 9, 10. The balance of entity executives is the reduce the unfavorable balance of power towards executives. Board should consist of half independent entity, excluding the chair. So just go through this area. Reason for NED independence, because this is the reason to provide the detached and the objective view of the board decisions, to provide expertise, to provide a shareholder with an independent voice, and to provide a confidence in corporate governance to reduce the acquisition of the interest in behavior of the executives. So this is NED should always be independent, and they have their own say, they have on their own experience, they have to benefit. So normally the old the senior most people who having a higher position in their companies, so they get become a non-executive directors when they become retire, and they just play a role as a non-executive director. So there, the threats to of independence, material business threat imply in last 5 year. So this rule will also be there. Their rotation or their role will be restricted for specific period. Close family ties is also a problem situation. Can be significant shareholder that's just served on board from more than 9 years. So these rules are should be they can affect the independence of the NED. And the NED on the board's advantages again this the book knowledge you have to grasp and understand. Chairperson and CEO. The chairperson is runs the board. CEO runs the company. This is a simple definition. Responsibility. Just go through student this responsibility of the both these roles. These responsibilities are also important to understand. Chairperson's responsibilities. What are their responsibility? To ensure that board sets they implement the company's direction and the strategy effectively. Act of the company's led representative. Specific responsibility of chairperson. Go through this as your reading bit. CEO responsibilities. What responsibilities are there for CEO? Take responsibility of the performance of the company as determined by the board strategy, their future plan, their budget, their allocation, all they have met. There will be responsibility under this CEO, their board, the chairperson, and the board of directors. Specific responsibility of the CEO. Again, this is in more detail. Closely monitor operations, interfere between board and employees, assist the selection and evaluation of board members. So all are easy, and just you read it and you will memorize. Reason against splitting the role. What are the roles splitting? So why they divide, distribute among the other person? They just don't want to give authorities to one person for all of their act. So directors induction and CPD, board of directors induction requirement, understanding the company, link with employees, induction program, formal CPD program, expand and update knowledge. So continue professional development. This is a CPD. Student, this is also part of CPD for your when you become a qualified and a member of ACCA, you have to fulfill their CPD requirements. So then now they just discuss about the induction process, how it is going through. So comprehensive. These are all reading part. The objective of induction to communicate vision of and culture, communicate practical procedural duties, reduce the time taken, and then as individual and welcome member of the board, and then ensure the retention of individual for future periods. Induction package, how it is ICSA is the charter secretary and the administration induction package suggests a brief outline of director role and responsibility, advice, share dealing with the disclosure price, and then sensitive matter of the company, and they discuss the board delegation and the fire and drill procedure will also be there. Company strategies will also be there, board operation, how the board operation will go, how few months later. Now, the objective of CPT to ensure director has sufficient skills and ability to be effective in sales. This is the main purpose of CPT. Even for you, student, you need to have a continuous professional development, because to just to update your knowledge, your training, your new. If in other company you may notice. So there are frequent CPD or frequent workshops are happening, because just to update their staff knowledge and update if any new update is coming about IFRS or IES, they just make a presentation and have a workshop over there. And this is same purpose is in the companies are also happening to just update their staff about their new new knowledge and new trainings and new workshops are happening. Legal and regulatory framework governing the board of directors, legal rights, legal and regulatory framework, how this is all section departments are uh, taken care. Conflict of interest is there. The legal regulatory framework will apply disqualification, appointment and retirement, removal, legal rights. All these issues are taken care, are taken into consideration by the legal department, legal rights and obligations, and the responsibility, what they have powers and their authorities. Director do not have unlimited power, so this is article of association, shareholder power, their provision and their decision. Fiduciary duty. So what is the fiduciary duty and penalties? Being aware of the objective of power vested in the director, leader consideration, nature, and the fiduciary relationship. So these are the relationship are defined by them, and they have to perform independently. The penalties, if director who breached the duties may face a civil action or something like that. So, according to UK, this is mainly every problem will come for CFO or finance director if he didn't fulfill the requirements of the company. Again, the conflict of interest. So contract with the listed company, and then director contracting with their own company, substantial property transaction, so then loans to the director. So these points, if you see in the scenario in the anywhere in your paper, so this you understand this is a conflict of interest, highlighting the conflict of interest. So these points, loans to director, if you see in the scenario or in paragraph in any area, so understood this is a conflict of interest. You have to take care, and you have to how you will highlight this area. So maybe they ask you point out the problem area. So if there a director has a loan and this is a director loan is there, so you just provide a disclosure. You have to mention it if it is a properly disclosed in the financial statement. If they have a related party transaction or insider dealing or trading, so they just mention inform all stakeholder about this matter. Performance evaluation of the board. This is the reading part. Yes, just go through. Performance evaluation, chairperson and NED. So how their performance is evaluated for the chairman and the non-executive director. Student, we will have sometime. I will put a pass card also. It will be a precise and a shorter one, and it will give you highlights, which will help you to recall your all readings. So just to be fast, because now we are heading towards your exam, and revision is going to start. So we'll share with you some slides of the pass card, so it will helpful for you. Keep watching and subscribe this channel to which will provide you all updates, future upcomings, board committees, board of directors, audit committee, risk committee, remuneration committee, nomination committee. How then each committee work? They have all under their department. So this is all. Importance of committee. Just go through. This is a very important area. Committee. This part is very much frequently tested. Nomination committee. So how this nomination committee is identified in many code of best practices. An example of UK corporate governance require that there should be a formal, rigorous and transparent a procedure for appointment of a new director to the board. The creation as per nomination committee, how they nominate, how they appoint, how they select. This is the whole procedure is mentioned here. Then responsibility of nomination committee. CEO chairperson succession, how it is happening, begins immediately after a new CEO is appointed. The search for potential replacement of CEO begins. Development of corporate governance regarding directors' remuneration. So this is also a Greenberry report is also there. Remuneration committee. What is the role of remuneration committee? So they just set the salary package, their objective of committee, their the balance between opposing viewpoints of stakeholder. Very interesting. This is your favorite part, students. So you have to update on this remuneration committee. Responsibility of remuneration committee. So what are their responsibilities? Just to set their own pay scale and give a benefit to others also according to their performance, their bonus scheme, and they set their incentive plan and all activities. And they keep motivating them how they will get remuneration and how the percentage of increase they will get. Remuneration definition: payment or compensation received or services or employment includes the basic salary, the bonuses, and other economic benefits that an employee or executive receive during the employment. So this is all your about the remuneration. Again, the company, the following work for the remuneration committee: attract, retain, and motivate staff. Attract, retain, and motivate. So just to not let them go and give them incentives, they give them shareholding, give them benefits or insurance benefits, and how they just get all these and they stay within the company. These are the remuneration policy for and then their strategy, how they implement. Component of directors remuneration package, benefit in kind, pension, performance related bonus and share options, basic salary. So these are the component of the incentives. basic pay, performance related. These are the easy bit. This is not going to be tested. These are easy for your learning, and they are preparing you for this position. And what is the share option, how they will consider whether director should be eligible for benefit for long-term incentives. So these are the only benefit incentives that they just announce them to retain the staff who don't want to, who don't leave the company. I mean, to say that if they give a long-term incentives, they just want the company, the directors or executives stay there and hope for the best. The retirement benefit, termination benefit. So corporate governance code of conduct is also there. So director remuneration and other issues, director remuneration, the regulatory, competitive, ethical, and legal. So now they have explained it further in other details. This chapter is most of the part is your reading part. So just to go through. Now there is a non-executive director's remuneration. Now this is the end of chapter, students. This is all the summary which we have gone through, all these areas.